As Ann had mentioned, there's a lot we don't know. There's a lot we don't know how it's going to happen, when it's going to happen, if it's going to happen. Is there a trade in your view here?
I think the trade's in Home Depot. I don't think it's in the home builders, and I would be cautious here. I think these are headlines that are fantastic headlines. Affordability is what seemingly we all want for the housing market, and I do think it's going to be difficult structurally to change that. It's a combination of really an income gap, a supply side dynamic that does not meet those folks. I get back to Home Depot, though, and this is a stock that around 350 seems to bounce, seems to have found a floor technically. But more importantly, I think the expectations in Home Depot are extremely low. They've guided for comps that are more or less flat, maybe down one, up one. Home improvement as a share of wallet, apparently we're at 30-year lows. So I think there's an opportunity and there's a belief that there could be another cycle of just kind of a remodeling. They're pro-business, we know. So I think there are different ways to play it. I also just want to, folks at home, take a look at that XHB and look under the hood. The top 10 stocks, there's about 3 home builders in there. The rest are Trane, Masco, Johnson Controls, Home Depot, Lowe's. So it's not necessarily buying the home builders when you buy that ETF.
So I own Home Depot and Lowe's. I feel like this is a little lucky, more than fully deserved. But I think the other thing it does do, if rates do move, is we always talk about that embedded loan, right? That mortgage that people have, they're so cheap. Steve always talks about you don't own a home, you own a mortgage. If you narrow that gap somewhat, then maybe you start to get a little more supply, and that would help as well. I understand Trump administration trying to do anything to help affordability.
Well, you have to look at it this way. Most people have a mortgage rate that's below 50% of the homeowners right now have a mortgage rate below 4%. So the only people that are going to be motivated to do this are 28% basically above 5%. So I think that there's a lot of percentages, a lot of wonky data here, but I don't think it's going to be a mad rush for homes if the rates come down, like it was with the pandemic. You're probably only going to have a third of the people trying to buy a different house or a different mortgage.
But still, even a little movement here for the sector, Julie, could mean a lot, because for a long time it was viewed that this is, there was a lock here. We didn't know where the 10-year yield was going to go. We didn't know how that was going to impact mortgage rates. And here we have, this impetus by the administration to directly hit on how you can massage mortgage rates to the best that they can here. And so that there is, I don't want to say a put, but, there's a real force in this administration. They want to do this.
Yeah, I think clearly it makes sense to be able to be motivated towards helping affordability. And I think structurally, the biggest issue is we just don't have the depth of mortgage buyers out there. And that makes it really difficult to really lower the rates in any kind of meaningful way. We're getting closer to the normal gap between what you see on treasuries and what you see on mortgages, but it's still pretty high. And that's just a function that the market is really structurally different than it was before the GFC. And, I think this is a good first step, right? But I agree, if we think about this in buyback terms, it's pretty small relative to the overall pool of the market. What the problem is really just structurally, we just need way more homes, way more than we have. And I think any action towards that, towards improving the ability for people to actually build homes, is going to be much more meaningful than doing a little buyback right here.